Welcome to the Ronel Talks Money show. Now, today we have another very unique and interesting investment opportunity, but it is different from what you are used to, in that in this case, you can actually get involved in the development phase of a residential property development. Tell us more about this opportunity. We have Nick Morgan from Opportunity with us today. So Nick, welcome and thank you for joining us.
Hi, Ronel. Yeah, good to be here. Nice to see you again.
And then I just want to remind the viewers, remember there will be a link in the description field where you can enter our monthly giveaway competition, where you can also win one of my books, Financially Fit and Wealthy, as well as other books and various online financial courses. So make sure you subscribe to the channel and you enter the competition in the link. But Nick, let's get into this. Maybe you can just tell us a little bit more about Opportunity and what you do.
So, Ronel, thanks. Yeah, Opportunity Private Capital. We're a Cape Town-based investment company. We're about 15 years old, founded 2006. And in brief, what we have is an asset-backed structured investment opportunity for private individuals or investors, and they can earn attractive or high returns on their capital by financing residential property developments. And these developments are funded only by our private clients. We don't use any institutional or banking financing at all any longer, not for the last 7 years or so. And our clients have happily averaged around 18% per annum fixed returns during this period. So it's going nicely, thanks. And how the company was founded initially is I came from investment banking, and my co-founder was already developing residential estates. And from our various backgrounds, we just felt there was an opportunity, there's a gap in the market for private people like you and I to get access to the funding of property developments, because where we came from, it was most of the time it was institutional or banking finance that was getting these opportunities. So hence this company was born many years ago.
I have to admit, I really, when I saw your name, Opportunity, that really, it just speaks to you in the sense that you think, okay, in this kind of time that we are living and what we are doing, I think everybody is looking for what's alternative investment options out there and what kind of opportunities are there for us to basically grow our money and to maybe invest in something that is a bit different than the traditional investments and that can potentially result in better returns. So I really like that name, Opportunity. But then I want to ask you, you can maybe just explain to us this whole concept a little more in layman's terms.
Okay, so in layman's terms, I'll try and put it together like this. If, as people know, if you want to finance the purchase of your own personal property, for example, you normally go to a bank and they give you a bond and they would fund your house. By the same token, property developments, and we in the residential space, traditionally, as I mentioned before, the guys would go to a bank because they need money in order to do the development, extract the value therefrom, and obviously the banks would do the financing thereof. In layman's terms, what's happening now is our clients or investors are basically going into the bank's shoes. So they become the financiers or the funders of the development, which is great for them because they get into the early phases of the project where the value can be extracted. Whereas traditionally, as you know, us guys in the middle income sector. Usually we come in right at the end where all the value's been extracted and we can buy a property for buy to let, etc. Whereas this is just giving normal people that option in a secure environment. I'll repeat, it's a secure asset-backed environment. So the security we offer investors is exactly the same as a bank would take if it funded a residential development. But in this case, it's, again, private investors who are getting the option to do this rather than banks. Does that cover the layman's terms? Is that clear enough?
Yes, I think we will go into a more detail as well with the other questions.
Okay.
Now, Nick, I think a lot of people are familiar with your typical kind of investing in physical property, investing in property shares or property unit trusts. And I think sometimes there's obviously pros and cons to all of this. But maybe you can also just explain to us how is this investment opportunity different from the traditional kind of property investments that we are all familiar with?
Okay, so you've actually mentioned quite a few different types of property investments there. So the first and most obvious, of course, is where you buy a property and you put a tenant in, and that's the usual traditional buy-to-let investment property. You also mentioned real estate investment trusts or property funds that are listed on the stock market, where people would invest whatever amount of money they want, and they get issued shares, and they get dividends or returns based upon those shares. We are slightly different in the sense that people don't own the physical property, so you're not tied into buying a property. You're linked to the property as your security, so you have that asset backing, but you're not involved for such a long period. You know, property is a long-term game. If you buy a property, you're in it for the long haul. And with us, you're coming in, you're taking your capital or investment, you're assisting with the funding of the project. That's how you're participating. You're getting a very attractive return based on that because you're part of the initial phases of extracting value out of the project. And it's also, you're not locked in for extended periods. I mean, our average investment length and it is about 16 months, and that varies depending on when you come into any one of our open investment cycles. So there's a bit of flexibility there for investors as well.
Yeah, I think what I definitely like about this is that, you know, where people have certain concerns about the physical property market, and also like you mentioned, you know, it is usually a big investment, and it is also, you know, there's a lot of risks attached to it as well, and it is a longer term, so you need to commit for a couple of years. So I think your opportunity definitely you know, speaks to those kind of risks and offer something different. And for those people who are a bit skeptical about those kind of things, you definitely offer something different. But what else would you say are the pros and the cons?
So it's a good question. I think your question is really about how to mitigate risk. Because as we know, there's no investment that's 100% risk-free. I mean, that kind of takes the fun out of it, doesn't it? So in terms of how we mitigate risk, there are a number of ways, but I think there's some primary ways we do this. The first one is that our entire structure is based around the protection of investor capital, first and foremost. So until our clients are repaid, they hold the assets as their security. To put that in layman's terms, I alluded to it earlier. If you want to buy your own residential property and you go to a bank and they offer you a bond or a loan in order to finance that property, they will take a covering bond over that property to protect themselves while you are repaying the loan. Same with us. We cannot transfer the properties until such time as the clients are repaid. So they have that proper asset protection in place. I think the second way that we mitigate risk is by the fact that we operate in quite a niche sector. We focus on small to medium-sized projects in the greater Cape Town region, and these are in high-demand middle-income areas. And even, we're in tricky times, as you know, and these remain, the areas that we in remain among the best performing in the country. So that obviously mitigates risks, and a lot of people find comfort in the areas that our investable projects are in. And then the third thing, which is vital as well, is that we control the whole development value chain. And that includes the financing, which is what we're talking about now. It's the development, the project management, the construction, and the sales. So we've got some really good efficiencies throughout that model, which can offset to investors. But more importantly, we have a lot better control over the entire process, which mitigates risk. So I think those are the main pros that we have in terms of mitigating risk. I think you talked about cons as well. We don't like talking about cons, Ronel.
There's always a con to everything.
Yeah. So I think the con, certainly the obvious con within our structure, is liquidity. Once you make your investment, you can't come and phone us, and say, hi, I'd like to extract my money because I want to go on an overseas trip or buy a new Porsche. You need to wait the entire length of the investment cycle. Your funds are tied in for that period, be it 12 months, 15 months, 18 months, or however long that cycle is going to be, which is important. So that liquidity is probably the biggest risk with us. It means people must be very careful not to invest the emergency money with us because it's not easily accessible.
Yeah, and I think that is something that's important, but still your term is, I think, a lot shorter than what you will get with other kind of property investments. And I do believe that is, it can be both a pro and a con if you think about it.
Yeah, I think that's actually a good point that you're saying in terms of the time frame. It's long enough to be meaningful, but not that long that you're tied into this long extrapolated process where your money's tied up for years and years and years. So that's a benefit, I think, as well, which mitigates risk. Sure.
Yeah, no, I agree. And then now you've said in this scenario, it's not where you are owning physical property or you are having a share in a property company. You are actually providing the finance. So it is like a loan agreement and you are obviously earning interest. That is your return that you will be receiving on this investment. You have mentioned about 18%, but maybe you can just talk to us a little bit about the returns that investors can expect and when exactly would they receive those returns?
Okay, so if, as you've just mentioned, so traditionally, even if we just take the last, people like working in chunks of time. So if we just take the last 5 years as a time, then we've averaged about 18% per annum to investors. Going forward, however, we've already got 3 years of investable pipelines ahead of us already in place, and investors can expect anything from 15% per annum to 18% per annum returns. Those are fixed returns on their investments, and that's what we have at the moment, with investment lengths ranging from 12 months or so, projected to be 12 months. So from 15% per annum, to answer your question, we have tiered investment rates. So our minimum investment is 100,000 Rand. So anything from there up to about 499,000 Rand, you get a fixed return of 15% per annum. Anything from 500,000 upwards as an investment, you get 18% per term. And that's our current investment cycle that's on offer.
Okay, and then also just to confirm, you would receive your returns at the end of the period. So it's not kind of like a monthly return typically.
No, absolutely not. So it's not an income product in that sense. So we don't offer quarterly or monthly returns at all. One has to go through the entire investment cycle, and that investment cycle, I don't know if we want to go into too much technical detail, but the bottom line is your investment. One of the ways that your investment is secured is you're linked to a specific unit within that project that you're investing in. that unit has to sell and transfer to the end buyer in order for the attorneys to pay your returns to you. So you have to wait for that cycle. We project for about 12 months.
And then you said now returns in terms of 15% to 18% per annum. Now that is really excellent returns if you compare it for kind of the period that you will be investing, comparing it to any kind of 12-month fixed deposit, money market, unit trusts. But your returns have obviously kind of beaten inflation up until now, which is excellent, because I think that is what everybody is just looking for. And I think that is where we as investors need to kind of move towards, to, really more consciously look for investment opportunities where we can beat inflation. But how comfortable do you feel? And I totally realize that no returns would ever be guaranteed. But how comfortable do you feel that you can basically keep up with offering returns that beat inflation?
Well, that's such a good point you're mentioning. I don't know if I can use an Afrikaans term. I don't know if people couple their investments on the inflation rate and understand necessarily that if you're not beating inflation, you're just not getting ahead. Then your money, in essence, is working, or the value of money is going backwards. So what you're saying is vital. One of our objectives and our mission is to make sure that we are comfortably beating inflation every single year, because we want to have our investors and our investments provide a really meaningful financial part of whatever their entire portfolio might be, whatever their financial goals might be. We want to make sure that they try and get ahead. It's one of the reasons that the business exists in the first place. And then second to that is, the returns are based in large as well by the level of financing each of these projects can carry. And if a project can only carry financing that's pegged at inflation, then the project is not actually viable. If that makes any sense. So we committed to providing inflationary beating returns. Absolutely.
Yeah, and I think what makes yours easier than other type of investments is also that you kind of go into a certain project, so kind of you like you said, you need to make sure that project would be feasible and it would be able to provide that returns. And it's not something that now you sit with this kind of development for forever and it doesn't really provide good returns, but now you are kind of stuck with it and now you need to do something with it. So I definitely think that is something that's really nice as well. But then I can actually, if I think about this opportunity, I can think of a lot of different type of investors that this would appeal to. But in your kind of experience, what would you say, what is the typical investor profile that this investment opportunity works well for?
So it's a difficult question to answer, because we have got a very diverse type of investor and age range of investors. So currently, statistically, if you take the outliers out of the statistics, our age range is literally between 38 and 61. That's the broad range. So it's quite diverse. And then in terms of from people's vocation points of view, we've literally got the full works, from nurses to doctors to vets to lawyers, etc. But funny enough, our biggest professional group that invests with us are accountants. So,
okay. It's good to know.
You should find some comfort in that as an accountant yourself. It's very diverse. We're appealing to, because our investments start at, and I just want to clarify this point, is our investments start at 100,000 Rand. And yes, it may sound like a lot, but in order to participate in these kind of investments, usually it would be very high net worth people or institutional financing who get the opportunity to access these kind of projects, etc., etc. So now we've literally got people start investing from 100,000 Rand up into the millions, depending on their specific profile. So we're covering a nice broad range, and especially covering people who want to stay invested in South Africa and possibly have no choice to go anywhere else, because the Rand is quite weak. So you're going to put your money offshore, but how much are you going to get for it? So it's a broad range, to answer your question.
You're starting off with a minimum investment requirement of 100,000. It's not, it's not that much. So it is kind of something that for people who want to try it out and, maybe invest 100,000 for the first year and see how it goes. And when they feel more confident about it or whatever, then they can increase the investment going forward. But just to confirm, then the minimum investment requirement would be 100,000, but there's no maximum. And in terms of investment period, you said it's about between 12 to 16 months, more or less.
Yeah. Okay. So the minimum is 100,000. The maximum in any investment cycle would be whatever that cap is that we've got in each cycle. Mm-hmm. We don't over raise. We know exactly what is required for that phase of a particular project at any given time. So that's what this one's mukpunt. That's what we aim for. And so people can invest anything up to what's available in any particular cycle. We have got investors who are vested in a couple of our projects that run sort of simultaneously or in tandem. So that happens as well. And in terms of the length of investment, Ronel, it does vary. So we project it at 12 months, but it is based upon the project timeline as well as the sales timeline. So it's not an exact science. So anything from 1 to 2 years is a comfortable time frame for investors to think about. Yeah.
Yeah, because I guess if something as severe as what we've seen now during lockdown, where you could obviously not develop for a couple of months, I mean, that would obviously impact on your investment period as well. And I think that can also be a con in the sense that, it could be a bit longer than what you expected. But again, it's not something that could be, severely. And also, I mean, things like this probably doesn't happen kind of all the time.
Sure. Well, that's an insightful comment you make, because everyone is affected by this pandemic and the lockdowns, etc. So, from us in practical terms, we were also affected. When lockdown hit, we were about 2/3 away from finishing our most recent project. We're about 2/3 in. And for 2 or 3 months, I can't remember the exact time frames, our construction team couldn't go in on site to finish the units. So there was a delay there. And then there was also a delay in the transfer process of properties, because certainly in Cape Town, the deeds office was in a bad state. There were long delays in terms of property transfers. So our investors' exits were delayed by 3.5 to 4 months longer than we anticipated because of these lockdowns. But the good thing is the security was never compromised, because the assets aren't going anywhere, even during a pandemic. And their interest is calculated daily. So even during that delay, they still kept on earning in this recent project 18% per annum. And now we've completed and exited that project. So we've got a couple of investors who are exiting in the next month or so. And that's it. So we've performed okay, and investors kept on earning their returns. So even though they were delayed, they didn't lose out in terms of it might have been just uncomfortable for those who needed access to that capital. But by and large, everyone's happy, and most people roll over. We've got we've got into the 80s as our retention rate of investors. So that's the guys who reinvest from one investment cycle to the next. That exceeds 80%. So that's good, because more importantly, we want to keep our current guys happy. That's vital.
Yeah, I think it is definitely a big advantage in the sense that, like you mentioned, you might be impacted in terms of the period, but you are still delivering good returns. And I think a lot of people have lost out during this lockdown period on their investments, or have seen a dramatic kind of decrease in their investment value. So I think that is definitely still another good benefit for investors. But Nick, as you mentioned, I am an accountant, so I would definitely need to know these things in terms of what's the legal stuff involved in this kind of opportunity.
Okay, so if I understand your question correctly, so the legal framework is the different facets to that, of course. So the legal structure has been coming many, many years that we've developed with our attorneys. So just tell me if I'm not answering your question correctly. So the first part of the legal structure is, of course, the contract. So that's called a loan agreement, and that's what ties the investor to the investment. The property that is linked to as security is stipulated in the agreement. The amount that they're investing is stipulated in the agreement. So that's the first contractual thing. Then I want to just get into the protocols we have in place as well, which I think are vital, because I think that's the difference between a lekker return and alles is great, and actually making sure that things are done correctly. So one thing we haven't spoken about it, and it can be quite complex, so I don't want to go into too much detail, but there is an independent trust. It's called the Noble Shield Security Trust. That is set up to safeguard investor interests. It is the gatekeeper, basically, for investors. So that trust has got, among others, it's got two independent trustees. One of the trustees is a partner at STBB Law Firm, and the other trustee is a financial trustee. He's an experienced guy. He's an ex-senior guy from PwC, worked with the Rembrandt Group, et cetera, as well. So these guys really look after the investor interests. So to give an example about the legalities and the protocol, if an investor decides to invest, the first thing that happens after signing the agreement is they pay their funds into the STBB Attorney's Trust account. Those funds stay there, currently earning 6.25% per annum, by the way. So we'll talk about that if you like. So those funds sit there until such time as they're ready to be deployed into the project itself. They do not get moved into the project unless the external accountant auditor for the trust that I've just mentioned, the financial guy, he looks at all the documentation, invoices, certificates, etc. If he's happy, he then approves to the attorneys, he authorizes them to pay money into the project. And that happens on a regular basis. It's a bit like a bank process. It's called a drawdown, but those protocols need to be followed. And that's part of the legal framework that's been set up. The other part is when an investor, when it's his exit time, i.e. the end of his cycle, the same financial trustee would have a look at the financial statement of the investor. He'd make sure that all the figures are correct. He'd make sure that that property is ready to be transferred to the end buyer. And he will then authorize the attorneys to repay the investor funds or roll them over, whatever they decide, and to transfer the property. So there are proper checks and balances in place for this. So that's the basic legal framework that we have in place. Does that answer your question?
Understand what will be kind of like in proof of my investment, and that would typically be your loan agreement that you will be receiving to basically confirm your well, I don't know if you must really call it an investment or your financing of the deal, but I mean that would be your kind of legal document that you will be receiving.
Yes. And the other thing, Ronel, that they will receive is they get a receipt of funds from the attorney. So when they pay their investment funds into the attorney's trust account, they will receive a letter saying we acknowledge receipt of funds, etc. So those two documents become vital to them.
Yeah, well, I guess if you've already during this year just invested your money in the trust account and just left it there for the year, you would already have been better off than in many other investments during this pandemic. But then also we've mentioned now that specifically the liquidity can be a bit of a risk, not really a risk, but maybe a con for people who might need their money during this period. And I think that, but I think we also need to be realistic, especially in terms of what happened during the past year. People are losing their jobs, get retrenched, or whatever might happen. Is there any option available if an investor really urgently needs their money during that 1 year period?
No, we don't generally get too many of those requests at all, because most people understand the dynamics of the investment. But if I have to role play something, obvious would be if you perhaps were invested and you wanted to extract your funds, I think the simplest thing would be to call us and maybe find someone yourself who might want to replace your investment, for example. But then it's not just a simple case of, great, I found someone, they'll pay the money, and all those checks and balances that I've explained have to happen. Sign off by the independent financial trustee, checking of the figures, payment from the attorney's trust account, and the new investor coming into the attorney's trust account. So those protocols would have to be followed, but really it's mostly incumbent upon the investor himself to see if he can find someone maybe to replace himself. It's a difficult position for us. We don't make contingency for people who might want to come in and exit early.
Okay. And then in terms of the costs involved, you have explained now that because you are coming into kind of like in the process kind of early on, you are obviously almost paying a lot less cost during the period, or as compared to when you would invest in physical property, when you come into the process a lot later, and you would obviously picking up a lot more costs. But what are the costs that would still be involved during this process?
So your cost is time. So you need to do your due diligence. You need to look at the agreements and make sure you're comfortable and do all that homework. But in terms of monetary costs, the returns that we project and quote to investors, those are net returns. So as I mentioned to you earlier, because we control the entire development value chain, we've got the cohesive finance, admin department, etc. So all those costs are offset within the entire process. So there's when we say to someone they're going to get a fixed return of 15% per annum and everything goes nicely, there are no fees that get deducted from that.
I think that is also a very important point to mention, because quite often people are, interest or returns are quoted to them, and those are not the net returns. And then when they actually receive the returns of the fees and of the taxes, then they are quite disappointed. So I think that that is something that people should be aware of, what's any potential fees. So this is good to know that the rates that you've quoted are already kind of after all fees are taken into account. But then
so Ronel, just to jump in there, sorry, is we are investors ourselves. We put our investor hat on. We're our own biggest investor. So we want people. That's why the security in our structure is quite complex to protect investor capital. But the actual process of investing, the investment itself, how it works, how your returns manifest, it's very transparent. It's quite easy to understand because it's meant to be there to make people really comfortable with how it works. The last thing you want is people not understanding an investment, because that's the worst thing. And that's probably half the problem out there, is people don't necessarily understand investments or how the returns are generated. And because we've got our investor hat on, we don't like any small print. So that's why what you're going to get is net of your net of fees. Yeah.
Okay, now that's excellent. And then another thing that I believe is quite important always for investors to understand would be the tax implications. So maybe you can also just discuss that.
Ronel, this is your job. We're not tax experts, you are. So to answer that question is, look, it's interest on a loan. So it forms part of your normal individual tax rate. If you're investing by yourself, if you're investing as another entity, then obviously it'll form part of that tax rate. But one thing that's quite important to note is that the interest is only deemed earned at the end of the cycle. So you don't have to then, so it's at the end of the cycle, and that's when you can start looking at all your tax affairs.
So it's not on an accrual basis. It's basically once you have actually received it, and then you include it as part of your normal kind of income tax. And then you obviously have your interest exemption portion as well that you can obviously deduct against it.
Sure.
But again, just to emphasize to the viewers, remember, nothing that we are discussing today would be financial advice or tax advice, because everybody's situation is different. So it's important that you discuss this with your tax consultant, your accountant, your financial advisor, to make sure that you know exactly what the impact would be for you personally. Nick, then I think you have mentioned a couple of things already, but I think what we have seen during the past years specifically, there were a lot of scams out there. And people promising huge returns, basically your returns on a daily basis or a monthly basis. And I think people are a bit more skeptical, a bit more scared to invest in things that they are not familiar with. But what are the things that you would say that can basically give people that bit of comfort in terms of they are dealing with a reputable and a legitimate company as well as a concept?
Okay. Put my marketing hats on. No, look, in fairness, I think there are a couple of things, and it's a really important question. It's I make a joke, but it's an extremely important question, and especially when you're investing in any investment where you're not investing with a household name, as in a big corporate, it becomes all the more important that you feel comfortable, because investing is often about trust, which is vital. So I think I can, just off the top of my head, let me just name a couple of things. One is, we have a decent track record spanning quite a number of years. So that in itself, that consistency must mean something. We've been in the same building for 15 years, so that in itself is something, I guess. We work under a juristic license, FSCA license. So we're a juristic rep for FSP 13370, which means our actions are regulated by the authority. So, in terms of management accounts, et cetera. Guys, potential investors are welcome to phone our attorneys to find out. We've got a long relationship with our attorneys off and on over the years, so they're welcome to call them in terms of verification. We've got investors who might be happy to talk to potential investors to give them some sort of sense of comfort. So that's just off the top of my head. But as far as the structure goes, that's about the company as well, and maybe just doing some due diligence about who the company is. But in terms of the structure, it's just vital to know that the structure itself, because you're linked to assets within the development, because that trust that I mentioned actually holds the development land, covering bond over the development land in favor of the investors. It means that if something happens to the development company or the role players in the development company, it's not going to impact the security of the investor. And that's vital. It means that they're not, there's a gap between them. It's at arm's length.
Such valid points that you are mentioning. And I think that this is definitely something that investors need to look at. And, just to have that sense of comfort that they are dealing with somebody who is not going to run away with their money. So, Nick, I want to thank you for spending some time with us today. Thank you for explaining more about your or investment opportunity. And I really enjoyed the discussion with you. And then to the viewers, again, I hope you have enjoyed this discussion. You have learned more about different or alternative investment opportunities available out there. And I am going to share opportunities, website details, if you want to get in touch with them to learn more about this investment opportunity. Then I also want to remind you again, remember to subscribe to the channel and go and enter the giveaway competition where you can win a book or online courses. And then it will be until the next time when we are going to chat a bit more about finance related topics.